Hello, we're going to talk about monetary policy and possible divergences that are going to be coming out in the forex market. Currently, we'll go over Dixie today and JPY. All right, just to point out, I already recorded a video, but I had the mic off, so we're doing this again. So earlier this year, in December, FOMC, Powell, the Feds, I'm pretty sure it was Powell, he made a comment on how inflation is lowering and that a more dovish stance may be coming out in the monetary policy. So that would be a divergence from what we initially had been having in the US economy. So I already wrote here when inflation is high, I believe it's at, don't quote me on this, I think it's at like 7, no it's not 7, it's like 3.4%, right? So when you have 3.4%, it's not ideal. I don't think the FOMC want that. They want to continue to lower it, meaning that they will raise interest rates to get more money flow, more foreign investors into the US dollar. And Dixie is a great portrayal of what's been going on in the economy. Now, when these comments have been made about maybe a more dovish stance, this was, I believe, almost an all-time high. I think this was an all-time high, so there was going to be selling off. It's been rejecting off the 100-point range. Dixie has. This bigger move here has been made because of those dovish comments. You know, investors have been pulling their money out. They don't know if the economy is doing well because they're talking about raising or lowering interest rates, meaning foreign investors won't get as much on the return. And there's been a lot of questions on how the US dollar and the economy is going to continue to do. But US data has been solid. Like PMI, retail sales, they've all been great. All really good. Well, not really good, but it's not like they've knocked them out of the sky, but they're solid. Solid enough to continue to invest in US dollar, and it doesn't look like the economy's going anywhere or into a recession. Now, what we should be seeing, if this data continues to come out as, for US dollar continues to come out good, we will continue to see the bulls take over. This is the 1-day chart. I know I'm in the way. It is the 1-day chart. So what does that mean for pairs like XXX, meaning whatever pair, right? We could do AUD, Euro, Great British Pound, right? Those pairs are the major pairs, right? So we're going to go over how AUD, USD is being affected currently. So we caught a nice trade here. I have all the drawings off for us on a different chart. So what we should see is as Dixie's going up, right? AUD USD should be, it will go down because US dollar is strengthening over AUD. So the conversion price is going to be lower, right? Assets. So before we actually see any significant move down to maybe 0.64, we should see a possible pullback, a correction of the selling before we make that move down into the 0.64. I'm keeping my stop losses tight, writing it out because maybe it does break. We don't know, right? You just never know. So I took the trade here on this pullback, on this big downward move, right? So the policy, if it continues to have these higher interest rates, we will continue to see Euro USD, GU, AUD USD to continue down, right? Going over to USD JPY, we will, because of the what's currently going on, today's Monday, January 22nd, the monetary policy is being talked about. So monetary policy, January, let's say 22nd, I said. 22nd to the 23rd, they will come out with that policy. And that's for the Bank of Japan. Bank of Japan. Now, I've already wrote it here because, like I said, I recorded this without the mic on. The interest rates have been negative. It's negative interest rates, meaning they're encouraging people to spend. They want money flowing into the economy, which will, compare to US, in terms of investors, foreign investors, we will only see JPY continue to go up if they don't change their stance on this dovish outlook on their policy. Now, US dollar has higher interest rates, meaning that's why we've been seeing these big bullish moves since of May 2022. Just big bullish moves from where it was, right? Not much going on for a while until the US strengthened over JPY, and that's why we're seeing up into 150. Of course, we've had big rejections at 150, but there's no reason why it wouldn't reach up there again and retest it. Like, JPY has not, it's actually weak because of the earthquakes that happened earlier this year. That affects the economy, that affects foreign investors, all these different things, right? So we could see this divergence in the monetary policy from a dovish to hawkish, and when it's hawkish, strengthens the currency, right? That encourages more people to invest into the economy, the currency, right? Because that's all this is. They want to buy assets when they're low, sell them when they're high, or vice versa. So that's all we're going to go over today in terms of monetary policy. Just want to go over the divergences that could come about and what we could see. And yeah, that's it. Thank you.